It is Tuesday the 28th of November, so I hope you're well. Going to take a slightly different tact to today's briefing because I'm going to be joined, due to popular demand, Sam North, our senior analyst and mentor. He's going to jump on after I give the first kind of 10-15 minutes. I'll focus on some of the news events which have happened, and then he's going to look at some of the charts technically and how we're set up this morning, and then maybe some points for consideration for strategies going into the rest of today. So first up then, let's just have a quick look at the charts this morning, and what we're looking at is a relatively quiet open. There's not really too much that's initially standing out. Bunds are up, bottom right here you can see up about 13 ticks, so we're managing just to get above the highs that were seen from yesterday around midday, and consequently we are at highs not seen since, if I broaden this chart out, on the upside to keep an eye on would be towards the latter part of last week. So 163.30, if we continue this upward trend, could be the first point of resistance just to keep an eye on. It does come amid some slight downward pressure since the open in the equity futures space, but in terms of the DAX, you can see centre left, and Eurostoxx as well this morning is pretty flat to just minor positive. Some fluctuation in price activity though this morning for the DAX, but that's quite typical, I'd say, over the opening few minutes of the cash market, which we saw half an hour ago. In the currency markets, again pretty flat. We've had a bit of movement in the euro currency, however it was not really based upon anything new in terms of fundamental news. We originally ran down to have a brief flirt beneath the 19 handle, however that's failed to sustain, and it was around that price level that we've seen a pretty decent recovery, and not only breaking the late Asia Pac kind of high, but also that matching up closely toward where we were from the early part of the Asia session from yesterday. And so consequently a break through that point saw a bit of a quick run up to pivot, which again has provided some resistance at 1932 before pulling back down to that exact level of where it took some momentum on the initial break at this 1923.5. But again, as I said, nothing really too fundamental based upon that. Looks more technically driven and flow driven with those stops being triggered. Cables flat, likewise in the S&P future, albeit the S&P still remaining in very close proximity, as you can see here, to the all-time record highs which we printed yesterday at 06.5, but I'll leave the kind of outlook for that to Sam shortly. So get straight into the headlines. A couple of things to have a look at. One of the things is I talked a lot yesterday about how solid the performance of Black Friday was in the US, and a couple of just interesting infographics just to quickly share with you to put that into a bit of perspective just as a reference point, because from a trend that we're seeing over the last few years, there's definitely a real big push away from the more traditional physical kind of way in which people shop. And so shopping malls, if you like, in the US kind of store traditional foot flow is certainly giving way to online demand. And quite interesting I saw here was as well, given the ease of access now through technology and smartphones, better internet connection plans to enable people to use their mobile devices more easily, people feeling more comfortable and confident with using that type of technology in terms of a payment system online as well for security issues. It's quite interesting to see here the performance of Black Friday traffic by the hour, and you can see here compared to 2014, compared to where we are now, every year is seeing even bigger and bigger jumps every Black Friday, which I thought was just quite interesting to see how this specific day for the retail market has become ever more increasingly important. Likewise, yesterday was Cyber Monday. Now, as you can see here, Adobe Data Analytics is kind of the main company that monitors these stats in real time, and they said Cyber Monday was the largest online sales day in history, with $6.59 billion. Over $1 billion more spent online than Cyber Monday of 2016. Revenue driven by smartphones. And actually, from a percentage basis, the use of mobile phones for online shopping has set a new record, accounting for 45% of website visits. So again, just to show you the kind of changing of the way of, I guess, shopping behavior, and how, when you look at the valuations of companies like Amazon, for instance, comparative to the more traditional retail names like, I don't know, Macy's and Kohl's and so on and so forth, who have been struggling comparative to Amazon, which has been on an absolute tear more recently, and now valued obviously as one of the largest companies in the world. So difficult to really see that trend changing anytime soon. Other things that to be aware of, we were looking out for, if I quickly flick over to the calendar here, you've got Fed's Powell at 3 o'clock. We were talking about on Monday how Fed's Powell today was going to be quite an important event, because this is his testimony on the confirmation of the fact that he'll be taking over from Janet Yellen, the existing Fed chair, come February of 2018 when her term finishes. Now the one thing is that although Powell's going to be speaking at 3 o'clock, his speech already came out last night. Came out on the Federal Reserve website as a pre-released text. So we already know what he's going to say this afternoon, which kind of takes a little bit of fun out of the event. But don't forget, there will be a Q&A session, so it's not still to be ignored. There will be politicians there in Congress questioning him, so definitely would be interested to hear how he responds to those. But in summary, the replacement of Yellen, then Jerome Powell, sides with the outgoing chair Yellen in arguing that the Fed's easy money policy has paid off by bringing millions back to work without any clear sign it has thrown markets off kilter. So essentially, as to be expected, Jerome Powell just sticking to the line of what has been issued from Janet Yellen, which is this kind of slow, gradual, reassuring normalization process. And so hence the reason why the market kind of took it in its stride. As I said though, although Powell will be speaking again at 3 o'clock, the actual opening statement then, we're not expecting anything too significant, but in the Q&A certainly I think it warrants just being vigilant in case he does say anything in particular out of line of what we've heard last night. One of the other headlines, of course, which the news channels are talking about a lot this morning, and I thought I'd just paint a little bit more colour as to what exactly this is. So this is the Bank of England stress test, and as the headline suggests, shows banks can withstand a disorderly Brexit. Now, one of the important things here, I thought I'd just briefly explain some of the details, is what exactly does the stress test entail? Because I think you'll be quite surprised by the gravity of the scenarios that they run these banks through, these models of negative economic scenarios, to see how they would withstand such negativity in an economic scenario. So first of all, 5 of the 7 banks passed the health check, while 2, Barclays and RBS, fell below the systemic reference point, a higher threshold that reflects their global significance. But actions taken by the bank since 2016 mean neither needs to bolster their capital. So basically it was just a notation, if you like, that those 2 in particular are below the level of systemic relevance, but given what they've already done, the actions taken in time gone by, they are still, in terms of capital, sufficient to withstand a downturn. Now, to give you an idea then of the actual stress tests themselves, they run through a test where basically if the economy, or if there was a 4.7% plunge in UK output, the tests actually run a scenario if the pound crashed 27% against the dollar. How would these banks perform? 27% against the dollar as a move would put us below parity in cable. So that's a pretty outlying scenario of an extremely negative situation if that was to develop. But still, these banks, through this test, would be able to mitigate that kind of situation. They also run tests at house prices in the UK devaluing by a third, a £40 billion of misconduct charges as well. The stress test scenario also encompassed a wide range of UK macroeconomic risks that could be associated with Brexit, and as a result it judges the UK banking system could continue to support the real economy through a disorderly Brexit. Remember, that's not what the baseline scenario is at the moment, which is more for a smooth transition being secured. Whether that's going to happen in the coming weeks or in the new year, as I've said many times before, it is a sense of inevitability about that, given the importance on both sides for Britain and Europe. But overall, what does this mean for UK bank stocks? Well, it really means very little. Not really seeing much in the way of a move from the banking stocks in the FTSE. This is a breakdown of the main gainers and losers of the FTSE 100, and as you can see, absolutely no mention of any of the banks at all. So again, I would say in terms of stress tests, this is very similar to what we see in US bank stress tests. These banks are in a much more healthier situation now comparative to where we were the onset of the global financial crisis this time 10 years ago. And so, i.e. much better, stronger capital buffers if there was to be a negative shock in the economy. The one company that here you can see, and obviously is one of the largest companies in the FTSE 100 as a constituent, so helping to prop the index, is Royal Dutch Shell. You can see here their A and B shares. So to cover off a few different things, why has Shell got two listed share prices comparative to all the other companies which have single? Class A shares refer to a classification of common stock that is accompanied by more voting rights than Class B shares, which are normally given to companies' management team. So there's a slight differentiation between the two, usually used for the purpose of voting rights, is the kind of summary. But when you're looking at the market cap, typically combining the two together, and hence then Royal Dutch Shell is one of the largest companies in the FTSE, and so helping prop it up, and marginal outperformance in the UK stock index on the back of that. So why is Shell up in the first place? Well, this is the headline this morning. Shell scraps scrip dividend, confirms 25 billion buyback plan. So they're going to stop paying dividends in their shares for the first time since 2015, as it seeks to demonstrate it has left the worst of the crude slump behind. They've also reiterated their 2015 plan to buy back at least $25 billion of shares from 2017 to 2020, subject to reducing debt further and recovery in oil prices. Now, obviously some people probably asking the question, what is a scrip dividend? Well, a scrip dividend is a scrip issue made in lieu of a cash dividend. So the reason they would do this, really, it's explained, I guess, here. The purchase of BG Group, which was obviously one of the largest M&A deals, has increased the company Shell's debt, and so the company used scrip program to help preserve cash. So rather than giving cash dividends, you're giving basically an issue, a right to then have that in the future by having a scrip issue, if that makes sense. So hopefully some of that terminology just to clarify. So again, the Bank of England stress tests, this is all to be as expected. No great shakes here, although it makes headline news as far as Bloomberg and Reuters and so on are concerned. Really, from a day-to-day, intraday perspective, it's non-market moving information, but just something to be aware of. The Shell one is certainly more important because it can reflect on the overall index performance given the size of that company individually. Okay, quick look at the calendar, and then I'll hand you over to Sam and he can talk you through a couple of the charts. So looking this morning, things are relatively quiet from a scheduled perspective. You've got money M3 annual growth figures from Europe at 9, loans to household, none of these are market moving. Moving into the afternoon, you get your building permit numbers. Don't forget, we had some absolutely fantastic housing data coming out of the US yesterday. I don't really think it comes as much as a surprise though, or much care for the market, given the fact that really the housing market is well in excess of better shape than it was even pre the financial crisis. So again, not really very high on the Fed's agenda at this point. Just looking here, October new home sales yesterday came in at 685,000, above the expected 625. which led to annual growth of 18.7% year on year, the highest in a decade. And the point being that given new home sales are recorded at contract signing, the recent uplift should bode well for permits in the coming months. So housing sector pretty robust at this point, so I don't really think here, this is just revisions as well that we're getting today, so this won't be important either, but maybe worth keeping an eye on the trade balance report coming out at 1:30. This will be alongside the wholesale inventories number, and then from Canada you also get producer prices at the same time. Going later into the afternoon, Case-Shiller numbers, the monthly home price index. Really, again, these are much lower ranked tiered data, i.e. non-market moving, but US consumer confidence and Richmond Fed could be more interesting. That'll be at 3 p.m. and of course that'll be along the same time with Fed's Powell giving his testimony and confirmation hearing. Looking out for the Q&A in more particular focus. We also have the inventory data from the API this evening as per usual, and then in the interim you do have a couple of speakers. We've already had Mark Carney speak this morning. His topic was just going over the details of the stress test results we've already had this morning, so nothing new on policy. Looking out for Fed's Dudley at 2:15, Powell then at 3, with Fed's Harker speaking on financial stability at 3:15. So that's your schedule for today and your update of the news. Let me hand over now to Sam and he can talk you through the charts and the setups, but have a good day. Thank you.
Thanks, and yeah, as he said, I'm just going to run through some of the charts in terms of the technical setups for now and the day ahead. And just before I go look into the euro.